There is a moment in every regular person's financial life that decides whether they stay poor forever or slowly become quietly wealthy. Most people never see it. It is not the day you get a raise. It is not the day you hit a savings goal. It is the day your money stops sleeping and finally goes to work. The problem is nobody teaches you how to start investing when you have been a saver your whole life. You keep waiting. You keep researching. You keep adding to a savings account earning almost nothing, while every year that money loses buying power. Meanwhile, inflation, taxes, and time quietly eat the safety you thought you were building. I want to show you the exact step-by-step path from saver to investor. No hype. No day trading. No crypto. Just the boring bridge that turns a full savings account into a real wealth machine. If you have ever thought, I know I should invest but I do not know how to start investing without messing it up, this video is for you. Stay till the end for the 4 gates every new investor must pass, because skipping any one of them is what makes most first-time investors lose money in year 1. Meet David. 42 years old, warehouse supervisor in Ohio, married, 2 kids. David has done everything right. He drives a used truck. He packs his lunch. He built up $38,000 in a savings account over 8 years. He is proud of it. His parents are proud of it. His bank account looks like a big warm hug. But here is what David does not see. That $38,000 is quietly bleeding. His account pays him 0.4% per year. Inflation is running around 3%. So every year his savings lose about 2.6% of buying power. In 8 years his $38,000 has actually shrunk to around $30,000 in real terms. He worked overtime to save that money, and inflation has been stealing from him the entire time. He just does not feel it because the number on the screen keeps going up a little. This is the trap. Saving feels like winning because the number never drops. But real money is not measured in dollars. It is measured in what those dollars can buy. And a savings account is one of the slowest, most polite ways to become poor. So when do you know it is time? There is a rule you can actually check tonight. It is called the 3-layer rule. Layer 1 is your emergency fund. 3 to 6 months of your basic expenses, in a plain savings account, untouched. Not for a vacation. Not for a car repair fund. Only for a real emergency like job loss or hospital. Layer 2 is short-term goals in the next 2 years. Down payment. Wedding. New engine. These stay in a high-yield savings account because you need the money soon and you cannot afford to lose any of it. Layer 3 is everything above that. Every dollar over layers 1 and 2 is what you will now start investing. If you have money sitting above layer 1 and layer 2 for longer than 1 year with no purpose, that money is not being safe. It is being punished. And the punishment compounds silently every 12 months. For David the math looks like this. His expenses are $3,800 a month. Layer 1 is 6 months, so $22,800. He has no big 2-year goal. So layer 2 is 0. That means everything above $22,800 is investable money. He has been sitting on $15,200 of overflow for years. $15,000 that has been quietly losing to inflation while he waited for the perfect time to start. Now here is the exact bridge David needs to walk. 4 steps. Simple. Boring. Proven. Step 1. Open the right account before you buy anything. If you have earned income and no workplace retirement plan, open a Roth IRA at a low-cost broker like Fidelity, Schwab, or Vanguard. If your job offers a 401k with any match, that comes first because the match is instant free money. If both accounts are full, the next dollar goes to a plain taxable brokerage account. The account is the container. Never buy investments in the wrong container or you will pay extra tax for the rest of your life. Step 2. Choose your investing engine. For 99% of new investors, this is one of two things. A target date fund set to the year you plan to retire, which auto-rebalances for you. Or a 3-fund portfolio of total US stock market, total international, and total bond market. That is it. You do not need stock picks. You do not need a market timing plan. You do not need a Discord group. Step 3. Automate the deposit. Set your bank to move a fixed dollar amount from your paycheck into your investment account on the same day every month. Then set your broker to auto-invest that money into your chosen fund the next business day. If you leave any manual step in there, you will hesitate, wait for a dip, and never invest. Automation removes the emotion. Step 4. Set a one-page rule for the next 10 years. Something as short as this. I will contribute this dollar amount every month. I will not check the balance more than 4 times a year. I will not sell anything unless I am inside 5 years of retirement. Print it. Tape it to the wall. Sign it. That page is your future self holding your current self accountable during the ugly years. People always ask if it matters when they start. Let me show you what waiting really costs. 2 savers, both 42, both making the same commitment of $500 a month. Saver 1 starts today. Saver 2 says he wants to research for 1 more year and starts on his 43rd birthday. Both invest until they are 65. Same fund. Same return, roughly 8% long-term average. Saver 1 ends with $415,000. Saver 2 ends with $375,000. That 1 year of thinking about it cost Saver 2 $40,000. $40,000. Real money. For 12 months of hesitation. And the cost is not linear. If you wait 5 years to start, you do not lose 5 times more. You lose more like 8 times more because the last years of compounding are the ones that pay the most. The mathematics of waiting are cruel and quiet. Every day you sit on cash above your emergency fund, you are handing your future self a lower bill of living. Now the 4 gates I promised you at the start. Skip any one of these and you will most likely lose money in your first year of investing, and quit forever. Do not skip. Gate 1. High interest debt is gone. Any debt over 8% interest gets paid off before you invest $1. Not because investing is bad, but because 8% guaranteed savings from paying off debt beats a maybe 8% from the market almost every year with 0 risk. Gate 2. Your emergency fund is real, in a real account, not just an idea. 6 months of expenses. In cash. Untouchable. Because the moment life hits you without a fund, you sell your investments at the worst possible time and you never come back. Gate 3. You know what you own and why. If you cannot explain your investment to a friend in 1 sentence, you own the wrong thing. Complex is not smart. Complex is where fees hide. Gate 4. You have a written pause plan. When the market drops 30%, and it will drop 30% at some point, your plan tells you exactly what to do. For most investors the plan is a single sentence. Keep buying on the schedule. Do not check the balance. That is the plan. Written before the crash. Followed during the crash. It is the reason ordinary people become quietly rich and clever people go broke. 6 months after David walked this exact bridge, here is what his life looks like. His emergency fund of $22,800 sits in a high-yield savings account earning 4%. His Roth IRA has $8,400 in a target date 2050 fund. His plain brokerage has $6,800 in a 3-fund portfolio. His paycheck now automatically sends $700 a month into his investments. He does not check the balance. He does not read financial news at night. He does not know what the Fed is doing. For the first time in his life, David is not just saving money. His money is quietly working the night shift. And here is the important part. Nothing about David's life changed on the outside. Same truck. Same house. Same lunchbox. But his future changed the moment he took the first step across the bridge from saver to investor. That is the whole secret. You do not need a bigger paycheck to start investing. You do not need a genius broker to start investing. You need one afternoon, 4 steps, 4 gates, and the guts to stop letting inflation eat your safety. If this helped you understand how to start investing without messing it up, subscribe. There is a new video every Sunday morning teaching a real, unglamorous, provable money skill your school forgot to teach you. And drop a comment telling me which gate you are stuck on. I read every single one. See you Sunday.